Hi, I am Anna. I come from www.ntvforex.com. Balfour Beatty share price. Balfour swings to first half loss analysis. http ntvforex.com news ID ADDB 48812-2027 22:36 am. As far as UK as the construction sector is concerned, the industry has had to face a litany of challenges. With the collapse of Carillion, along with the restructuring of a number of its peers, Balfour Beatty has managed to be able to stand apart, its share price back to where it finished at the end of last year. Balfour Beattyâ's share price did see a big plunge in the lead up to the various sector shutdowns, but largely due to the diligence of CEO Leo Quinn and his turnaround strategy, the company is in a much better place now than it was all those years ago when it fended off a takeover approach from Carillion. Since then, the company has gone from strength to strength, only focusing on high-margin work. This has helped hugely in maintaining a healthy cash flow and saw profits last year rise 8% to A221M, when the company reported full-year numbers in March. A rise in the order book and focus on high-margin work saw net cash rise 68% to A325M. In June, the company pulled the dividend to conserve cash, despite an order book of A17.4 Bn and a fairly solid liquidity base of A452M in cash and A375M in credit. The company also has A3 Bn worth of contracts in relation to HS2, though given recent events around COVID-19 you have to question whether pursuing such a project would still make economic sense to future governments. Today's first half update has served to confirm this outlook despite a pre-tax loss of A24M, which was largely due to operational reasons, with UK construction accounting for the bulk of it, with a loss of A23M. This was due to the various closures of sites in Scotland, while the London operations only had limited productivity. Airport operations were also adversely affected. NBSP revenues came in 6% higher at A4.1 Bn, while the order book rose to A17.5 Bn, from A13.2 Bn a year ago, and 20% higher than the end of the last fiscal year, largely due to the addition of A3 Bn of new HS2 contracts. Cash flow performance was also positive, with an increase in net cash to A563M from A425M, helped in some part by various cost-saving measures, including the up to 20% temporary salary reductions for senior management, as well as the cancellation of the final dividend. The company also went on to say it would look to reinstate the dividend as soon as possible. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me mt5.expert.advisors.